I guess just as a starting point, could you please give me a quick, I guess, elevator pitch on Flock Homes?
Yeah, sure, happy to, and thanks for having me on. So yeah, Flock Homes, we're a financial services company focused on building the retirement solution for landlords. Concretely, we serve the millions of Americans who own rental properties, and we help them with tax-deferred exit solutions. So our first product was an exchange fund focused on single-family rentals, and we're now expanding into other asset classes like multifamily, manufactured housing, vacation rentals, condos, etc. And we're a Series B startup. We're backed by Andreessen Horowitz, Primary Ventures, Renegade Partners, amongst others. So we have great backing from great investors.
Huge backing. And how long have you been around? How long have you been focused on single family compared to kind of going into those new asset types?
Yeah, so Flock, the company, was founded in 2020, and the single family rental fund itself launched early 21. We've been focused on single family rentals kind of since that point of launching the single family rental fund in 2021. But it was always part of the vision to expand into other asset classes. The thinking was that, what we do, and we can obviously get into, what we do and how it works, but like the thinking is that what we do can apply to any asset class, but within real estate, single family rentals is the largest and most fragmented asset class. And so if you can do it there, if you can take on that asset class, you can do it anywhere. So we deliberately started with kind of the largest, biggest problem, and are expanding.
Yeah, makes sense. Yeah, amazing. And I guess, how did you end up here? Can I get a run through on your background and what led you to become COO at Flock Homes today?
Sure. Yeah. So I've kind of taken a few different turns. I started my career in kind of traditional sort of financial services back in the UK in London. I joined Citigroup as a sell-side equity research analyst straight after graduating, was there for a few years. Then I went to a hedge fund for a while, and then I went to sort of a large kind of asset manager where I managed some of their emerging market funds. And sort of during that period of being an equity analyst slash portfolio manager, I covered pretty much everything from Russian chemical stocks to sort of Asian giant, big tech companies. You kind of name it, I covered it. And like, long story short, I really enjoyed that job in many ways. I enjoyed the like intellectual challenge of it, but I felt sort of the itch to genuinely contribute towards building something, grow over time. And I'd always been attracted to the world of startups, the world of tech, so I decided to kind of figure out how to move into that space. In hindsight, I did everything wrong. I like took some time out, did an MBA in Europe because at that time I was like, I want to stay in Europe. I don't want to go to the US. Like, I know the startup scene is best in the US, but I want to stay in Europe. So I went to a kind of boutique business school in Europe that was focused on really people staying in Europe. And then like 3 months into that MBA, changed my mind and decided actually I wanted to kind of go to the US. So I ended up just like cold networking my way to a job at a fintech called Wealthfront, which when I joined, we were about 200 people. I joined with perfect timing, like 3 days before COVID hit. So I sort of landed in the Bay Area and got a text from my Airbnb host saying that she had to cancel my reservation. But anyway, we got through that. I was at Wealthfront for 3 years, where I did a mixture of finance and strategy and operations roles, and then moved to a neobank called Varo, where I was chief of staff for a couple of years, and then I joined Flock about a year ago. I joined as head of people strategy and finance, and then at the beginning of this year was promoted to COO.
I'd love to know a little bit more about Flock Homes. I guess one thing that's always good to understand is misconceptions perhaps about your model. Is there something that comes up as a misunderstanding about Flock Homes and the product there? And something also good to know would be, where do competitors struggle to replicate what you're doing?
Yeah, no, that's a great question. I would say the biggest thing people misunderstand about us is that people think of it as just another way to sell real estate. In actuality, what we are is an investment management platform. The core idea behind what we do is that we're allowing landlords to transition from direct property ownership to sort of passive ownership of real estate by exchanging ownership of a physical piece of real estate for shares in a diversified fund, and that exchange mechanism is tax deferred, so they don't have to pay capital gains tax when they just sell their property outright for cash. So really, that allows people to stay invested in real estate, but eliminating the day-to-day responsibilities of actually managing a rental property, of dealing with blown up sinks or broken dishwashers, you name it, right? It also helps landlords reduce concentration risk, because they may have 5 single-family rentals in a certain market, and they're exchanging ownership of those rentals for shares in a fund that is diversified nationwide. And so really, we're an investment management platform, not just another way to sell real estate. Like, the clients who go through this process with us, they become effectively long-term clients in our fund, almost like effectively limited partners in any kind of private fund. And the other thing is that we do this we focus predominantly on small to medium-sized landlords across the US, like everyday mom and pop landlords, people who have been historically underserved by institutional solutions. So I think that's something that people, that's a misconception about us. We're not another way to sell. We're in fact, the beginning of a very long-term relationship. We hope that people stay Flock clients until they die, and then we hope they pass on their shares in our fund or a chunk of their shares in our fund to their heirs, and that their children stay Flock clients for a very long time.
So your retention rate is up here.
I would say we have a pretty good retention rate. Yes, we're always trying to kind of get the to work towards that very long-term relationship with clients. Yeah, and then to the second part of your question, where people perhaps like struggle to replicate what we do. Like I think the hardest thing is that it requires multiple capabilities operating together. You need, we're not just acquiring, like convincing clients to join Flock, we're also actually acquiring their real estate effectively, because again, that real estate's going to become part of our fund. So you need nationwide client acquisition infrastructure, you need underwriting infrastructure, you need to be able to inspect these households physically, you need to be able to do this across thousands of assets, across many markets. We need to be able to onboard clients seamlessly, we need to be able to onboard the assets seamlessly, and then once the assets are part of our fund, we need to be able to operate them well to generate the returns for the fund.
Right.
There's also a lot of embedded expertise around things like partnership tax laws, the way this whole setup works in terms of legal and regulatory compliance, reporting, and so on. So there's a lot of operational complexity.
Moving parts.
Exactly. In addition to that, the whole thing, none of that complexity is great and difficult to manage and so on, but none of it works. Like the transaction will fail at the very beginning and at the end if there isn't trust. We need to be able to build trust with landlords. They're contributing assets that often represent decades of accumulated wealth, right? And they won't do that unless they get to know us and get to trust how we operate and what we've built. And so typically, if you sort of just zoom out and take stock of all that I've run through, like competitors will typically possess, one or two of these capabilities, but our model requires all of them to be working well, efficiently together. And that's something that our competitors don't have. In fact, we know many of the large sort of private equity players in institutional real estate, and every single conversation we have with them sort of goes the same way, that they think what we're doing is incredibly cool, but they all kind of like shake their head and chuckle at the idea that they would ever try to sort of do it themselves. So I would say that's the thing people struggle to replicate.
I guess it takes a really personal approach. So is it just the kind of large firms that you just mentioned there that do this aside from you guys?
Yeah, there's large firms do a version of what we do, not the exact thing. What large firms do is they'll offer effectively a product that's similar to ours, but they do it as a two-step process rather than a one-step process. And I don't need to go into all the details of how that works, but it's a sort of clunkier and a more expensive path than the way we do it. We do a seamless direct exchange from the very beginning. It allows us to lower our costs and it makes it a much better experience. There's only really one or two firms that offer that direct exchange in the US, and both of those firms, neither of those firms are offering them to mom and pop single family rental owners like we are. So we're really the only firm that's focused on this area of the market doing what we do.
I know you guys raised Series B funding at around 20 million last year. How have you allocated that funding? How has it accelerated things for Flock? I would love to hear how it's really impacted things for you guys.
Yeah, no, that's a great question. Yeah, that's right. Pretty much this time last year, we closed a Series B led by Renegade Partners with participation from our other top investors like 𝐻𝐿MRE and LMRE Ventures. That really unlocked two major initiatives. The first was sort of more targeted investment into go-to-market. Something that's crazy when you think about it is that we've grown our single family rental fund to now 1,100 homes nationwide, nearly $300 million of real estate, with effectively no proper marketing. The only sort of marketing that we've had, our go-to-marketing to date, has been a lot of direct mail that was sort of run as like a side hustle by our sales team. And so we scaled even just with that, which I think shows the level of like product market fit that we have. But on the heels of the Series B, we made some targeted investments into building out like a proper multi-channel marketing strategy, building out a partnerships motion. So we made our first dedicated hires in both marketing and partnerships. We're now focused, for example, on ramping up distribution through financial advisors as one big vertical that we're working on through partnerships. The other big thing the Series B unlocked is expansion into other asset classes, which I mentioned sort of at the outset. that was something that we'd always planned to do from the very beginning. The Series B sort of unlocked it. We had some people who are focused exclusively on expanding Flock into other asset classes like multifamily, vacation rentals, condos, etc. Right now, we're very close to launching our first multifamily fund. So that's kind of the next asset class that we've been focusing on first.
So you've been with the business for a year now. What's something that you thought would be easy when you joined, but has turned out to be quite the opposite?
Yeah. I guess, I mean, I don't think, to be perfectly honest, I don't think I thought anything would be easy when I joined. But perhaps something,
well, at least you came in with that mindset.
Yeah. But perhaps something that's been even harder than I thought it'd be. I think, I mentioned we're about to hopefully launch our first multifamily fund. Expanding into other asset classes, I think, has taken longer, has been harder than I thought it would be at the beginning. When you look at it on paper, it can kind of seem relatively straightforward. We have the 721 exchange infrastructure that underlies our company. We have a track record of investment performance in our single family rental fund. We already operate real estate. So we have the model, and you think it's relatively straightforward to just port it from one asset class to another. But actually, multifamily real estate is a completely different beast. It's a different ecosystem. The owners behave differently. Brokers are different, and also real estate brokers tend to be attached to almost every deal in multifamily real estate, whereas in single family, it's a smaller percentage. And you also realize, I think the industry, it's a kind of smaller sample size of owners. It's a lot more driven by tight relationships and long-standing habits, not just kind of the economics of the transaction or the argument that we can make. So I guess that's something that I'm still very bullish on, but perhaps that has been more challenging even than I thought it would be. And you kind of learn that even if your product is compelling, you still have to kind of earn credibility in a new corner of the market.
Yeah, a question that I had that would be great to know from someone from the industry is, what do you feel is structurally broken in single family rental and small landlord as an ecosystem today? And where do you feel like Flock actually fixed that rather than just move down the edges?
Yeah, that's actually a very topical question given the debate and sort of policy that's been kicked off recently regarding institutional ownership of single family rentals in the US. But the US rental system is kind of overwhelmingly run by small landlords, not institutions. 90% of single family rentals are owned by mom and pop landlords. Large institutions, who are now the subject of new legislation and a lot of noise, only own a few percent of single family rentals across the country. And yet a lot of this kind of policy debate has focused on banning institutional ownership, right? Which, in my opinion, makes headlines, right? And it's sort of an easy sort of scapegoat to target, but it doesn't actually address the real issue. The real structural problem is that millions of rental problems are owned across the country by aging or burnt out landlords. Many of these homes become underinvested, poorly maintained, operationally neglected, because the owners just lack time, capital, energy, will, you name it, right? But they also feel trapped, right? Because they don't feel like they have a clean exit from their real estate. They don't want to sell and trigger the capital gains tax. If they do what's called a 1031 exchange, where in the US you basically swap, ownership of one rental for a similar rental, and that exchange is tax deferred. That doesn't really solve their problem because yes, they get out of one property, but then they're in another and they have to manage that.
Yeah.
And so, estimates point to the fact that several million homes are likely sitting idle in the US because of this dynamic. So if we're talking about housing supply and making housing more affordable, we really need to address this issue of getting housing to its highest and best use. And at Flock, we think that what we do directly helps to solve this issue, because by giving landlords, a tax-deferred exit via the 721 exchange, allowing them to contribute homes into the fund that we manage, you're allowing these landlords to exit something that they no longer want to be doing. You're solving their problem by maintaining their wealth. We then renovate the homes back up to standard. We place long-term tenants, right? And so this converts effectively like a fragmented, underutilized sort of stock of housing into high-quality rental housing. And so what we do, we think, is actually improving the quality and utilization of housing stock, as versus, shuffling sort of paper around. Housing, I think, if you had to kind of wrap it up in some way, like housing often focuses, or debates around housing often focuses on who owns the homes. But to our mind, the bigger question is actually whether the homes are being run well and housing families and being livable. And that's the gap that we're trying to fix.
Yeah, and I guess there must be such a gap for that as well. I mean, it's really interesting to see that, like you said, you're completely removing that pain point and they're still getting a benefit at the end of it. They're not losing anything, which is great. You guys, so obviously you're a mix of prop tech, fintech, investment management. Yeah, it's quite a mix for you guys. So how would you describe the environment internally at Flock Homes?
Yeah, that's true. Yeah, I mean, we kind of sit at the intersection of real estate, finance slash fintech, and technology. Yeah, so I mean, we end up having kind of a team that's inherently kind of cross-disciplinary, and we face problems that are cross-disciplinary. And I'd say the way it kind of translates into our culture and environment is like we try to blend all those things in how we operate. So we try to think from first principles when attacking problems, the way engineers often do. We try to maintain extremely high operating rigor, as is required from people in finance. And then we're also scrappy, and we figure out paths forward. We figure out how to get things done, which is often like a trait of people who, often a trait of good real estate operators.
Yeah, I think it's good to bring different people from different backgrounds together as well. It's never a bad idea.
Yeah, exactly. I mean, and so yeah, like the environment kind of like any startup, there's just a sort of inherent level of like ambiguity to what we do, and you have to kind of navigate that ambiguity. There's also a lot of complexity given our model. I like to talk about this term like navigating by dead reckoning. Which is kind of like it's a real like nautical navigation term, which basically means like take your last position and navigate based off where you knew you were last. But like it's effectively a good heuristic for figuring out how to move forward despite not having instructions, not having a playbook, not having pre-existing processes. You use judgment, you take action, and you adjust as you learn. And that's kind of a key trait, I think, of like doing well in our environment.
This is always a pretty hard question to answer, but what is the culture at Flock Homes?
Yeah, good question. As trite as it sounds, I'll answer that by framing it in our like core company values. So we have 3 company values: ownership, trust, a sense of urgency, which probably don't sound surprising for any kind of growing business that's trying to go fast, but I'll kind of explain what they mean in our context. Ownership, everything that we do is based on this. Our clients are owners of real estate. They care deeply about the real estate and the wealth that they've spent in most cases multiple decades accumulating, and we need to care about that too. We need to take that very seriously, and we need to mirror that attitude in how we treat the work that we do. We need to maintain extreme levels of ownership over the work that we do as well, and by mirroring our clients and how we work, we're likely to meet them where they are. Trust is our second core value. Yeah. So trust is our second core value. I kind of said, I think earlier that trust is the foundation of our business. Nobody joins Flock without a high degree of trust in what we've built, in who we are. And again, we need to mirror this with each other, right? When we work, we need to be able to trust each other to produce high quality work. We need to be able to trust each other to operate with high levels of integrity. And sense of urgency, the last one, like many startups, right? We need to be able to move fast. That's one of our advantages. But again, to bring it back to our clients, many of our clients, as mom and pop landlords, they've often pulled themselves up by their bootstraps in life. Many of them have worked, blue collar jobs, but they've just saved well. They've invested in real estate, and over time, they've built up impressive levels of wealth. And to do that, they've operated throughout their lives with extreme levels of urgency. And we need to do the same. We need to have the same level of urgency in how we operate. And it's often how we demonstrate to our clients when we're convincing them to become clients that's how we're going to operate their real estate as well or better than they used to.
Yeah, you need to reflect how you would work for your end customer and your clients, I guess. What specific milestones should we expect from Flock in 2026?
Yeah, I won't spoil all the details, but I mean, we have an exciting tech roadmap in 26. Almost every week or every day, there's a new advance in AI now, as I'm sure you know, that unlocks another capability for us. And all of these things, we're incredibly bullish on everything that we see on the AI front, on the tech front these days, because we have such complex internal workflows, because we're dealing with retiring landlords. Everything that comes out is just a way to make us better and faster and deliver a superior customer experience. And so I'm really excited about that. I also mentioned that we're close to launching our multifamily fund. So touch wood, a very large milestone soon to come there. And we're also close to getting distribution through large custodial platforms like Charles Schwab and Fidelity, which is very exciting, as that's going to allow us to kind of really ramp up distribution through financial advisors when getting our product out there.
Yeah, that's exciting. You mentioned something there about AI, and I guess how does that translate with your customers? Like, is it well received? I guess it's easy for them to use your products, but how is that being received by your end customer, if that is relevant?
Yeah, it's a good question. We have a huge sort of spectrum of like tech savviness among our customers. all the way from people who are, former engineers, right, and very tech savvy, to people that, can barely get into their Gmail accounts.
I was going to say, you surely have a lot of that.
Right. So for us, the way we're using AI today is we don't try to push a lot of tech onto the customer. We have a seamless kind of digital onboarding experience. We have a portal that people interact with when they're deciding whether or not they do Flock. We try to make it as simple and as clean as possible, knowing who our customer is. The way we think we're leveraging AI most today, and can continue to do so, is more like on our back end, to kind of make our operational or internal workflows as quick as possible. Just to give you one example, when we underwrite a property and do due diligence on an owner and an asset, there are all kinds of documentation that we need to gather from the customer and then review. So we need to gather leases, rent rolls, generate rent acknowledgement forms if we need to, ownership docs if the property is held in an LLC, for example, information, documents on mortgage if there's an outstanding loan on the property, all that kind of stuff. All that stuff needs to be reviewed. We leverage tech to do so today, and we have a lot of kind of very smart, very scrappy people that do so quickly. But we also are in the process of building kind of more AI to be able to ingest these documents in an automated way and just automatically pass them. And that's a big, today that's one of our operational bottlenecks to how many homes we can onboard each month. And obviously with tech and leveraging AI in a place like that within our flows, we could massively increase the throughput of transactions that we could do each month.
Yeah, and have you got any numbers on kind of how that has increased, how that has allowed you guys to onboard so many new homes?
Yeah, I would say on average, it's probably allowed us to double the number of new homes each month that we do. Yeah.
That's great. Yeah, I guess a final question from me, I always like to ask is, what advice would you give a startup entering this space?
Yeah, I think the main advice I would give is just, well, I suppose two pieces of advice. One, really understand where you're different, like where your unique advantage is. Prop tech, fintech, these spaces in tech and in financial services and real estate, they're very crowded spaces. There are a lot of different players out there with different solutions. To be successful, you really need to understand like where you're different and how you're different. And then related to that, focus. Like understand where you're different and just go like as deep and be as rigorous as possible on that one thing and get really, really good at it. That would be my advice.
Yeah. Well, thank you so much, Rich. I don't know if there's anything else you'd want to add on to the end of that. It was a great conversation. You guys have really carved out a niche in the market, and it's exciting to see, how you guys will move into the new asset types. And
this has been a really great conversation. I'll just add, our website is www.flockhomes.com. Check it out. Information.
Shameless plug. It's going to be done.
Exactly. And if you know any low basis real estate owners in the US, you know where to bring them.